Welcome, everyone, to another session of TriTech University. My name is Bill Steppen, and today we are going to be taking a look at the bank reconciliation functions of the program. Now, this is going to be kind of a follow-up from a conversation that we started on Wednesday with the daily deposits. If you were in attendance on that day, you're going to be seeing some of those elements coming into play today in regards to bank reconciliation. A few housekeeping things, as always. We are using GoToWebinar, and if you are in attendance and you have any questions, or if you'd just like to say hi, I'd love to hear from you. But there is a questions box on that GoToWebinar toolbar. Feel free to go ahead and type in any questions that you have or any comments you might have, and I will be reviewing those throughout the course of the seminar, and I will do my best to answer those as see them come in. Now, of course, that GoToWebinar can take up quite a bit of screen real estate. So if you're having a problem seeing what I'm covering, there's going to be a little button on there. It looks like a little orange button with a white arrow. You can click on that and shrink that away. And that way you'll be able to hopefully see the full extent of what I'm sharing with you. Now, one other disclaimer that I'd like to give just on behalf of TriTech as a whole, we are a technology company. We're not really going to be an accounting firm. So what I'm covering, since it does kind of relate kind of specifically to accounting related questions, if you have any questions about the accounting, you're going to probably be best off checking with your accountant or bookkeeper on the hows and whys of what we're doing specifically. We're going to be looking at more of the how it actually all works as far as just the program in general relating to bank reconciliation. If you're not familiar, bank reconciliation is just a way to confirm that the money going in and out of your checking account that you have as far as your records coincides with the records that your bank has. And if there's any discrepancies between the two, you can reach out to your bank and figure out what those discrepancies might be and why they're there. So without further ado, let's go ahead and take a look at how bank reconciliation works in the program. Now, there's not a whole lot of setup really that's needed. All that you would really need to do is to make sure that you have your checking accounts established. Now, checking accounts are ledger accounts in the general ledger. So if we take a look in the maintenance, ledger, and your chart of accounts, we have a couple of checking accounts here. We don't have all of these listed specifically as checking accounts, and I'll talk about that in a second. But you can see we have a checking account number 1 and also a checking account number 2. We really only checking account 1 set as a bona fide checking account in the program. Further down, we also have what's called a vendor prepay clearing. Now, I'm just going to mention it right now as that it's down here. It's not really officially a checking account per se, but if you ever notice that when I do some of these webinars and I go into places where we can do check disbursements, such as if I go back into modules and ledger and check disbursement, and it's going to mention these crediting accounts that I can be writing these checks from, you'll notice it mentions simply only checking account number 1 and vendor prepay clearing. Why is that? Well, the reason for that is back in the maintenance and ledger maintenance, there are some system categories that define what a checking account is. If we go ahead and search for checking, you'll see that there's a system category in here called 1818, and basically any ledger numbers that you add to this system category are going to be recognized as checking accounts that transactions can be out from. Now, again, you wouldn't really be using the vendor prepay clearing as a checking account per se. We kind of have that account reserved for when you're doing prepayments, such as with a credit card. So for the purposes of our webinar today, we're going to be focusing specifically on the checking account number 1. Karen Davis, I see you mentioning that you cannot hear me. I also don't see that you've selected a method of audio. So there should be some kind of option on webinar toolbar for whether or not you're going to be using computer speakers or if you are wanting to phone in and listen. So you may want to check in on that. Can anyone else hear me? I'm seeing that my audio is being broadcasted. So please let me know in the comments if you're, or the questions area, if you're not able to hear me. Other people are saying that they can hear. So let me actually, since Karen obviously didn't hear me tell her that she can't hear me, let me take just a brief moment to message her. So I'm going to send her a quick message. Okay. So I've just sent that over to her. Hopefully she'll be able to listen in here momentarily. And if nothing else, of course, the whole session is being recorded. So she'll be able to hear me that way on the recording, if nothing else. Obviously, I'd like her to be able to hear now, but we will carry on here. So again, basically what I just wanted to make sure is that we understand where these checking accounts are coming from. That's important when we take a look at the bank reconciliation itself. The bank reconciliation we will find in the modules menu and into Ledger, and you'll see a program here called Bank Reconciliation. Now, when you are doing bank reconciliation, it's hopefully a fairly straightforward program. I see Stephanie mentioning that she is never able to get me on computer audio and she has to phone in every meeting. And that is very curious, Stephanie, but as long as you're able to hear me in some way, shape, or form, that's the important thing. It looks like I now have my office to myself, so I'm going to turn on the rest of the lights in here so that it's not so gloomy. Okay. So when you're in bank reconciliation, the thing with it is that you'll notice it's going to ask us which checking account we want to reconcile. You'll never really want to reconcile the prepaid clearing account. We really only want to reconcile actual checking accounts. The program is designed to only reconcile those accounts that would have ideally a positive balance. So when you come in and do this, it's going to ask you for that account, and then it's also going to ask you for some details from your actual bank statement, the closing date, the opening balance, and the ending balance. Now, when you come in and do this, I'm going to be popping in and out of this area several times so that we can hopefully get the gist of where these numbers are coming from. What I'm going to do is I'm going to go ahead and put in that this is the end of the month. It doesn't necessarily have to be the end of the month. You can see how it is coming up and saying the date entered is not the last day of the month. Most bank statements usually do go to month end. So it's just kind of reminding you of that, but it's not the end of the world if the closing date isn't that day. For the purposes of my webinar, I'm going to go ahead and assume that my bank statement is through the end of this month. And then it's going to ask for the opening balance and the ending balance from your statement. Now I've got some numbers here and I'm going to plug them in here. So 3464431 and 3427181. So unfortunately, it looks like I lost a little bit of money in my checking account during this last statement period. But what I'm going to do is go ahead and continue. And this is going to bring me to the second tab for clearing these statement entries. If you've ever balanced your checking account, this should be something that you're familiar with. You would basically go through and from your statement, you would find the checks cleared during this time period and the deposits that cleared during this time period. And you would basically go through and you would check mark those clearings. Now on this screen, hopefully you can see it. If it unfortunately might be a little small, if you're on a smaller screen, I apologize. But on the left-hand side, we can see a listing of all of the payments and checks that have that I have written out of this checking account that have not yet cleared. On the right-hand side, I'm seeing a list of all the deposits that I would have made into my checking account that likewise I have not cleared. There may be some entries here from prior months where those checks and deposits were officially deposited as far as my records are concerned, but the bank did not get them cleared on that statement period. So that's one thing you'll want to kind of keep in mind if you're brand new to to doing bank reconciliation and balancing checking accounts. Basically, when we're talking about clearing, that we have check marked that yes, it did either come out of the checking account or get deposited into the checking account. I'm also going to be talking about what's known as floats, where a transaction floats from one statement period to the next. And that's where I would have either written a check or made a deposit as far as my bookkeeping is concerned, but the bank did not get that cleared, and it is floating to the next payment period, the next statement period. That being said, you'll notice that down at the bottom here, on the bottom right, there are two columns of statement balance and difference and ledger balance and difference. Now, ideally, these numbers should be the same. You'll notice I've got them off just by a little bit, and I'll talk about why that is here in just a moment. Then below that, you'll see two columns for cleared and not cleared, with those being for the deposits and the payments and checks. And what you'll notice is as I check mark these amounts, these checks and deposits, that amount is going to move from clear to the cleared. So I check mark that my $200 electric company payment did clear. I can check mark that my payment to landlord cleared, and I can also check mark that my deposits for this month have cleared. You can see how they're going to be moving from one side to the other. Now, basically, that's kind of how this works. Before I kind of finish this up, I want to talk about what you might experience if these numbers are off. So before I do anything, let's do this. I'm going to go ahead and actually cancel out of here. And I'm going to come back to the first tab. And what I'm going to do is I'm going to say, well, maybe these numbers are different from the statements. Normally, the numbers in the statement are going to be the accurate numbers, but in this case, I'm going to make adjustments to what I'm seeing as far as the bank statement. So let's say that these numbers are just $1,000 higher, $10,000 higher. 44,644 and 44,271. I'm going to go ahead and continue with that. You're going to notice that now these numbers are not matching at all. So I've got the statement balance as far as the ending amount from there, and that number has not changed because the only difference between the two is that $372.50 of the checks and the deposits. Over on the ledger side, number has remained the same because this number is actually coming from that 108 checking account in my chart of accounts, the balance of that ledger as of basically the end of the month. The ledger difference, you can now see, is actually a positive number, way off from what it was before, because it still wants to try and reach basically this amount here. So between this and this is basically kind of where that ledger difference is coming from. Hopefully that makes sense. The idea with this would be if the balance of the statement should be what it is and the ledger balance is off, you may need to go back and make some adjustments to the ledger balance in your system. Now, an easy way to see where these numbers are coming from, I'm going to actually cancel and exit out of here. And a good way to kind of see those numbers will be a report that you can run. Let's go to the reports menu and into general ledger, and you'll want to run what's called a detail ledger listing. If we take a look at the detail ledger listing, I'm going to go ahead and say that the period ending date is 4/30, and I'm going to go ahead and do basically that month of 4/1 through 4/30. I'm going to do this specifically for my 108 accounts, and I'm going to go ahead and run this report, and I'll print it to screen so that I can share it with you. What you're going to see on here is it's going to show a beginning balance. So we can see that up there at the top, the 34, 644, 31. And then it's basically showing me the activity in and out of my 1081 accounts. So the CD sources are check disbursements and the DP sources are deposits. Down below, you'll see totals of debits and credits. So we've had the total debit balance between that time period is 3502,181. The total credit balance is 800. If you're concerned about debits and credits being positive and negative in here, again, this is without getting too far down the rabbit hole of accounting 101. Basically, debit activity to an asset account such as this increases the balance, and credit activity decreases the balance. So try not to get too concerned about how credits from a layman's activity would normally add to an account and debits would detract from it. This is accounting that we're talking about. By the way, I am by no means an accountant. I just stayed at a Holiday Inn Express last night. So you can see that the total balance at the end of this comes out to 34,221.81. That is basically what we want to have when it's all said and done. That's what we should be seeing on the statement activity. Now, we're not. We're going to talk about what the difference is there in just a moment. But if you wanted to see where the ledger is, that's basically where it's getting those numbers from. Hopefully that makes sense. If you have any questions, definitely let me know. Let's go ahead and now come back to my bank reconciliation. So, go to bank reconciliation. And now I'm going to go back and I'm going to put in the numbers that I originally started with. So we're going to go ahead and select the checking account. We're going to go ahead and do it as the closing date of 4/30. We're going to put in that opening balance of 34,644.31 and the ending balance of 34,271.81. I'm going to go ahead and continue on that. In my hypothetical statement, I had 3 checks written on my system, but only 2 of them have cleared to my statement, my hypothetical statement that I'm holding here in my hypothetical hand. We're going to go ahead and check mark the electric company check and the building rent check. We're not going to check mark this check here. I named it float this check for my own reminding purposes, but obviously the payee would be, who the payment is actually to. So in this case, my $100 check to that service did not clear on my bank statement. So I'm not going to check mark that. I'm going to let that float. And you can see it's basically going to go along as not cleared. What I'm now going to do is I'm going to go ahead and go down and clear the deposits. And you'll notice if I clear these, basically all my deposits have cleared, but I'm still coming up on a negative $50 balance difference between both my statement and my ledger. So why is that? First of all, before I discuss that, you'll notice that even though my statement balance and my ledger balance are off by that $50, I am still in balance as far as the differences between the two. And that's because if you come here and you take this amount and basically add it to that, we're ultimately going to get to where we'd be as far as the kind of the difference there. But we still have this negative $50 to take care of. What is that? Well, if you would scour through your statement, you might find, again, on my hypothetical statement, that I actually had a $50 bank fee during this time period that I wasn't aware of. What I can do is I can leave this open and I can come and I can do a general journal entry. Let's say that bank fee happened on the 22nd. And what I'm going to do is I'm basically just going to plug it in as a journal entry. So I'm going to say that it was for my Dubuque location, Dubuque County. The source is, I'm just going to do it as a general journal source. I'm going to say that this was a reference of bank fee. And what I'm going to do is I'm going to post this in proper accounting fashion. I'm going to do both a debit and a credit. The first thing I'm going to do is I'm going to go ahead and I'm going to select my checking account. I want to reduce the balance of this bank fee or of this checking account. So I'm going to say that this was a incurred bank fee, and I'm going to credit that of $50. I'm going to go ahead and proceed with that. So basically, you'll see that this is now showing as a total $50 so far. I need this to be a balanced entry. So what I'm going to do is I'm going to add a second line. The top lines here for the journal entry process are going to remain the same. What I'm now going to do is I'm going to go down to my expense areas in the ledger, and I'm going to select this as a professional service. Your ledger accounts certainly may be different than my ledger accounts. I am going to select a department in this case because I do have departments set up for keeping track of kind of an advanced accounting with this. And now what I'm going to do is I'm going to go ahead and debit that to this expense account. I'm going to go ahead and proceed with that. This will make the total now be in balance of a total net zero. If you've ever heard that term net zero, that's what we're looking for. We're going to go ahead and save that. And basically when I save that and I come back over to here, and what I'm going to do is I'm just going to kind of refresh this. So if I modify the balance, you'll see that that incurred bank fee is now showing up here for me to go ahead and clear. And when I clear it, you'll see that this is now coming out to that full $0 difference between the two. And again, just to get back to why these two balances are different, if I go ahead and add that amount to here, that comes out to the difference between the statement balance and the ledger balance, because the ledger balance is already recording that I've taken $100 out of my checking account, but the bank has not yet. So that's going to be the difference. Next month, when I get next month's statements, and hopefully that check will have cleared at that point, that will then be part of the statement activity for me to clear. And that's basically what bank reconciliation is all about. So kind of understanding where these numbers are coming from, the whole process and concept of clearing these activities to the ledger account, to the checking account, and then following through. I should stress that bank reconciliation does not actually, if I were to save this, this does not actually make any journal entries of its own. All it's simply doing is going through and saying that these activities to the checking account are now going to be considered cleared, and they're not going to now show up on next month's bank reconciliation. This is solely a tool to make sure that you know what's going in and out of your checking account, and that coincides with what the bank says is coming in and out of your checking account. So if there's any questions on this, definitely let me know. As far as upcoming webinars, I have 2 upcoming webinars next week, and I will be adding to the webinar calendar for the upcoming month of May. So next Tuesday, I believe, if I remember correctly, I'm doing a webinar on the concept of tabs, letting your customers run tabs for point of sale and kind of adding to that balance as you go. That can be definitely handy in a lot of situations if you have a need for that for your type of store. And then on Thursday, again, if I remember correctly, I will be doing an in-depth review of our inventory export-import utility. That can be a really powerful tool for going in and making sweeping changes to your inventory. But there's a lot of things that people think it can do that you wouldn't want to use it for in those situations. So we're going to take a look at that as well. Teresa has a question. Can all of this information as far as vendor checks, etc., be exported to QuickBooks, and how detailed would that information be that's exported? Technically, yes, Teresa. That being said, the idea of AIM is that you're doing your accounting within AIM. If you're doing your accounting in QuickBooks, you're probably not going to be doing this bank reconciliation process in AIM. You're probably going to be doing that in QuickBooks. I did do a webinar on a QuickBooks export, which basically has its own process in place where what you would do is in the chart of accounts, you would go through the accounts and you would map these individual accounts to a QuickBooks account so that as you map all these accounts, you could then do a ledger utility routine where you could export this activity to QuickBooks. And if you're going to be using your QuickBooks for accounting, basically what you're just going to be doing is you're going to be taking the raw ledger activity, pushing that out to QuickBooks, and then really doing the majority of your accounting from there. There's two strategies for that. One, if you want to use QuickBooks as your basis of accounting, really all you're doing is you're just taking the numbers and pulling them into QuickBooks so that you can do it from there. The strategy is maybe you're going to be doing all of your accounting within AIM, but you have an outside CPA who still prefers QuickBooks formatted activity. So you would do all of your accounting in AIM, including bank reconciliation routines, but you would do the QuickBooks export maybe once a quarter or so that your accountant, your outside bookkeeper, they can pull all that into their QuickBooks program. And usually the main reason for that is because they're managing perhaps hundreds of different accounts, and they like to pull all of that activity into QuickBooks just to keep it easy for them. So yes, it can be linked to QuickBooks. It really wouldn't be what we're looking at here. It would just be that raw ledger activity. So the date of the transaction, the ledger number, the description, the debit and credit amount, stuff like that. It's not going to have any other activity such as customer invoice information or what the inventory was if we're talking about sales activity and stuff like that. It's solely going to be that raw ledger detail. But thank you so much for the question. And I see you're going to look into the ledger webinar, so that would be great. If there are any other questions, I'll just take a few moments to give a chance for those to come in. Otherwise, one other thing I will mention here is if you do have any suggestions for upcoming webinars, definitely let me know either in the questions or feel free to send me an email. You can reach me at training@tritechretail.com. And if you have a suggestion for a possible upcoming webinar, I would love to hear it. We're doing these not so that I can be sitting here chatting, but just so that we can reach out and make sure that you're getting the most out of your software investment. So we're here to serve everyone from any part of our company. I'm just kind of the figurehead here that is here smiling pretty for the camera. So I'd love to share whatever information I can from TriTech as a whole to help you all out, not just in this weird time that we're having with this whole pandemic and lots of states being locked down and stuff like that, but above and beyond that, just so that you can make sure that your business is thriving, hopefully with the use of our available tools and services. Alana has a question. Hi, Alana. How are you? Can you show how to correct a 20-cent difference on ledger not showing on the bank statement? That's basically what I just kind of did there with the incurred bank fee. But basically, it would just be a matter of going in and doing a journal entry. So whatever that is, whether that is a 20-cent difference above or below the balance, if you need to add to your balance, you would do it as a debit to the checking account with a journal entry. And if you needed to subtract that difference from the checking account, you would do it as a credit. You would just also need to make sure, like I did with the balancing $50 entry to the professional services account, you just need to make sure that you are telling the other half of what that 20-cent difference is. You know, what's the balancing entry with that? It's all just journal entries when it's all said and done. So hopefully that helps there, Alana. I'm more than happy to go into further depth with that afterwards if we need to. But basically, that is what we did, that incurred bank fee, where I did not have that on my ledger, but it was on the statement. So that would be a difference, basically a similar difference in that respect. I will see if there's any other questions that come in. And if you happen to think of a question afterwards that you didn't get a chance to ask here, by all means, definitely go ahead and reach out to me at that training at tritechretail.com. I'll be more than happy to answer them based on this webinar. Thank you so much for everyone who's been signing up and attending these webinars as well. I really appreciate it. It tells me that people are still out there trying to make this all work. And a lot of you I know are being super adaptive to the circumstances. A lot of you are doing a lot of curbside service, offering free delivery since you're having to either shut down your showroom or otherwise limit the amount of customers that are being able to come in at any given time. So that is awesome to see you all out there just rolling with the punches, as it were, and making this work, because people are still out there. They still want to live their lives. And in a lot of cases, they still want to go out and go shopping if they have the means to do so. So we encourage you to keep doing what you're doing and making it work. Stephanie has a question. Do the filtering and sorting functions work the same as version 11? That is an excellent question there, Stephanie. Basically, when it comes to filtering and sorting, these are kind of an advanced function, part of the version 12 system, as it were, where I can come here and I can sort by payee or check or group by dates and all those different kinds of things. These are exclusive to version 12. When it comes to version 11, we would have to have programmed that into the column in order to be able to sort by that column. So in version 11, if you see that the column header is in bold on that given grid, you would be able to click on that column and then sort by that column detail. Otherwise, no. It's basically what we're doing here is kind of specific to version 12. So like when I was in the system categories and typing in that I wanted to find any categories that dealt with checking directly, that was a kind of an exclusive V12 function. So one more reason to look into that upgrade to version 12, right? John says, thank you, great videos. Thank you so much for the accolades, John. It's always great to hear that our efforts are appreciated. So I don't see any other questions coming in. It looks like a lot of folks are kind of filtering out. Again, definitely reach out to us if there's anything else that we can do, any other webinars we can offer, and keep an eye on our member portal for the webinar schedule. You'll find it on the left-hand side of the member portal page, where there will be a little link that says sign up for webinars. We're always sending out emails and posting other kinds of reminders as to the webinars that we have coming up. So definitely check us out on our social media feeds on Facebook and Twitter and all those other activities that we can do to reach out and stay communicative with you. Thank you so much. I'll let you all get back to your day, and I hope you make it a great one. Take care.